Have you ever felt like you're the only one struggling with money? Like everyone around you has their financial life perfectly together while you're just trying to make it to the next paycheck? Well, I've got news for you that might actually make you feel better, or maybe a whole lot worse, depending on where you stand. The truth is, most people are broke. And I'm not talking about homeless broke or living in a cardboard box broke. I'm talking about regular people with jobs, nice clothes, new cars, and Instagram-worthy vacations who are actually one emergency away from financial disaster. Today, I'm going to share some statistics with me that are going to blow your mind. Some of these numbers are so shocking that you might not even believe them at first. But these aren't made-up figures or wild guesses. These come straight from the Federal Reserve, the Bureau of Labor Statistics, and other government agencies that track this stuff for a living. By the end of this video, you'll know exactly where you stand compared to everyone else, and I guarantee it's going to change how you think about money. If you're serious about getting your finances under control and actually building some wealth instead of just pretending to have money, make sure to subscribe to the channel and hit that like button. It helps more people find this information, and honestly, more people need to hear these truths. So let's start with something that should terrify every single person watching this video. According to the Federal Reserve's most recent survey, nearly 40% of Americans couldn't come up with $400 cash if they had an emergency right now. Read that again. 40% of people don't have $400 sitting around for emergencies. We're not talking about $10,000 or even $1,000. We're talking about $400. That's less than a single paycheck for most people working full-time. That's less than what many people spend on their monthly car payment. Think about what a $400 emergency looks like in real life. Your car breaks down and needs a new alternator. Your kid breaks their arm and you've got insurance deductibles to pay. Your refrigerator dies and you need to replace it before all your food spoils. Your dog eats something stupid and needs emergency vet care. These aren't once-in-a-lifetime catastrophic events. These are Tuesday afternoon inconveniences that happen to everyone eventually. But for 40% of Americans, these Tuesday afternoon inconveniences become full-blown financial crises. They're putting it on a credit card and hoping they can pay it off eventually. They're borrowing money from family members. They're taking out payday loans at predatory interest rates. They're skipping the repair and hoping the problem goes away on its own. Here's what makes this even more insane. This 40% includes people who have jobs. These aren't unemployed people struggling to find work. These are people getting up every morning, going to their jobs, earning paychecks, and still living so close to the edge that $400 would wreck their entire financial situation. But wait, it gets worse. Let's talk about the paycheck-to-paycheck reality that nobody wants to admit they're living in. You'd think that living paycheck to paycheck is something that only affects people earning minimum wage or working part-time jobs, right? Wrong. According to recent surveys, over 60% of Americans report living paycheck to paycheck. That's more than half the country. But here's the kicker that's going to really mess with your head. This includes people making over $100,000 per year. You read that right. There are people pulling in six-figure salaries who can't make it from one paycheck to the next without sweating whether they'll have enough money to cover their bills. How is this even possible? It comes down to one simple truth that most people refuse to accept. Your income doesn't determine whether you're broke or not. Your spending does. You can make $50,000 per year and build wealth if you spend $40,000. Or you can make $150,000 per year and be completely broke if you spend $155,000. The problem is that most people increase their spending every single time their income goes up. They get a raise and immediately commit to a bigger apartment or a nicer car payment. They get a promotion and suddenly they're shopping at more expensive stores and eating out more often. This is called lifestyle inflation, and it's absolutely destroying the average person's ability to build any kind of financial security. When you're living paycheck to paycheck, you're basically running on a financial treadmill. You're working hard, making decent money, but you're not actually getting anywhere. You're stuck in the same place month after month, year after year. Now let's talk about what people actually have in their checking accounts, because this is where things get really uncomfortable. The median checking account balance in America is around $2,900. Now, before you start feeling too good or too bad about that number, let me break down what this actually means. Half of all Americans have less than $2,900 sitting in their checking account right now. But it gets more interesting when you look at it by age. People under 35 have a median checking account balance of just over $1,900. That's barely enough to cover rent in most cities. The 35 to 44 age group does a bit better at around $2,500, but even that isn't exactly a comfortable cushion when you consider monthly expenses. Here's what drives me crazy about these numbers. A lot of people look at their checking account balance and think that's their wealth. They see a few $1,000s in their account and feel like they're doing okay financially. But your checking account isn't wealth. It's just the money flowing through your account to pay your bills. Real wealth is what you have left over after you've paid all those bills. Real wealth is money that's invested and growing. Real wealth is assets that increase in value over time. Your checking account balance is basically just proof that you got paid recently. It doesn't tell you anything about your actual financial health. You could have $5,000 in your checking account today and still be completely broke if you have $8,000 in bills due this month. Speaking of being broke, let's dive into the debt statistics that really show how underwater most people are. The average American household is carrying over $145,000 in total debt. Now that number includes mortgages, which are actually one of the better kinds of debt to have since you're buying something that typically increases in value. But let's break down the other debt that's crushing people. Student loan debt averages around $38,000 per borrower. And unlike other kinds of debt, you can't bankrupt your way out of student loans. They're with you until you pay them off or until you die. Some people are making payments on student loans well into their 50s and 60s for degrees they got decades ago. Auto loans have reached absolutely insane levels. The average new car loan is now over $40,000, with monthly payments averaging around $700. Think about that for a second. People are committing to $700 per month for 5 or 6 years just to drive a car that loses value the second they drive it off the lot. And here's the thing that makes this even crazier. Most people don't keep their cars for the full loan term. They trade them in after 3 or 4 years for another new car, rolling their negative equity into the new loan. They're paying for cars they don't even own anymore. Credit card debt, as we mentioned before, averages over $9,000 per household. But the really scary part isn't the amount, it's the interest rates. We're talking 18%, 22%, sometimes 25% or higher. If you're carrying a $9,000 balance at 20% interest and only making minimum payments, you'll be paying on that debt for over 30 years, and you'll end up paying more than $20,000 in interest alone. Then there's personal loans, payday loans, and medical debt. Medical debt is particularly brutal because it's not something people choose. You don't decide to get sick or injured, but suddenly you're sitting there with a $5,000 bill from a hospital visit, even with insurance. The average American with medical debt owes around $2,000, but plenty of people are carrying tens of thousands in medical bills they're trying to pay off. Now here's something that's going to really twist your brain. There are people out there making great money, driving luxury cars, living in nice houses, wearing expensive clothes, and they're actually broke. Completely, totally, undeniably broke. I call this the broke millionaire phenomenon, except most of these people aren't even millionaires. They just look like they are. You've seen these people. They're your coworkers, your neighbors, the people you follow on social media. They've got the latest iPhone, the Tesla in the driveway, the designer handbags, the expensive gym membership, the subscription to every streaming service known to mankind. From the outside, they look like they're crushing it financially. But here's what you don't see. That luxury car, it's leased, and they're paying $800 a month for the privilege of driving it. That nice house, they put 3% down, and they're stretched so thin on the mortgage that one missed paycheck would put them in foreclosure territory. Those designer clothes? Credit card. That vacation they just posted about? Credit card. That fancy dinner at the new restaurant downtown? You guessed it, credit card. These people have mastered the art of looking wealthy while being completely broke. Their net worth is often negative, meaning they owe more than they own. But as long as they can make the minimum payments on all their debt, they can keep up the appearance of success. The problem is that this is a house of cards. One job loss, one unexpected expense, one economic downturn, and the whole thing collapses. And when it does, it happens fast, and it happens hard. This is why you can never judge someone's financial situation by what they appear to have. The guy driving the beat-up Honda Civic might have $500,000 in investment accounts. The woman with the luxury SUV might be drowning in debt. Appearances mean absolutely nothing when it comes to actual wealth. Let's talk about something that separates people who build wealth from people who stay broke forever.
Investment participation. According to recent data, only about 58% of Americans own any stock at all. That means 42% of people aren't invested in the market in any way. No stocks, no mutual funds, no index funds, nothing. They're sitting completely on the sidelines while the market has historically returned about 10% per year over the long term. Now, some of this is because people simply don't have extra money to invest, which ties back to everything we've been talking about. But a lot of it is because people either don't understand investing or they're scared of it. They've heard stories about people losing money in the stock market, so they keep their money in a savings account, earning 0.5% interest while inflation eats away at their purchasing power every single year. For those who do participate in employer retirement plans like 401ks, the numbers aren't much better. The average 401k balance across all ages is only around $112,000. And remember, that's average, not median. The median is much lower because a small number of people with huge balances pull that average up. For people in their 60s who are approaching retirement, the median 401k balance is only around $89,000. If you retire with $89,000 and follow the 4% rule, you're pulling out about $3,500 per year from your retirement accounts. That's less than $300 per month. You cannot retire on $300 per month, even with Social Security helping out. This is the reality that millions of Americans are facing, and most of them have no idea how underprepared they are.
Here's something that might explain why so many people are broke despite having access to all the financial information in the world. Financial literacy in this country is absolutely abysmal. Studies show that only about 57% of adults in the United States are financially literate. That means nearly half of all adults don't understand basic financial concepts like compound interest, inflation, or how credit cards actually work. Here's a simple test they use to measure financial literacy. If you put $100 in a savings account that earns 2% interest per year, how much will you have after 5 years? More than $102, exactly $102, or less than $102? The correct answer is more than $102 because of compound interest. But a shocking number of people get this wrong. They don't understand that interest earns interest. This is the most fundamental concept in building wealth, and half the population doesn't get it. Or how about this one? If you have a credit card with an 18% annual interest rate and you only make minimum payments, do you know how long it will take to pay off and how much you'll actually pay? Most people have no idea. They see the minimum payment amount and they pay it, without understanding they're mostly just paying interest and barely touching the principal. This lack of financial knowledge isn't just an inconvenience, it's actively keeping people poor. When you don't understand how money works, you make terrible decisions with it. You take out loans you can't afford. You don't invest when you should. You fall for scams and predatory financial products. You work your entire life and have nothing to show for it because you never learned the basic rules of the game. Now let's talk about something that's making all of this worse: social media and the comparison trap. We're living in an age where everyone's highlight reel is on display 24/7. You scroll through Instagram and you see people on beaches in Bali, driving expensive cars, eating at fancy restaurants, wearing designer clothes, and living in beautiful homes. What you don't see is the credit card debt funding those vacations. You don't see the car payment that's eating up 20% of their income. You don't see the student loan payments they're struggling to make. You don't see the anxiety they feel every time they check their bank account. Studies show that people who spend more time on social media are more likely to overspend and go into debt. Why? Because they're constantly comparing themselves to everyone else and trying to keep up. They see their friends posting about a new purchase and they feel like they need to make a similar purchase to prove they're doing just as well. This is financial suicide. You're making spending decisions based on what other people appear to have rather than based on what you can actually afford. The reality is that most of the people posting about their amazing lives on social media are just as broke as everyone else. They're just better at hiding it behind filters and carefully curated photos. Everyone's trying to convince everyone else that they're doing great, while privately they're stressed about money and living paycheck to paycheck. Stop comparing your real life to everyone else's highlight reel. Stop making financial decisions based on what you think you're supposed to have. Stop spending money you don't have on things you don't need to impress people you don't even like. So here's what all of these statistics are really telling us. The average person in this country is financially unprepared for almost everything. They can't handle a $400 emergency. They're living paycheck to paycheck regardless of how much they earn. They're drowning in debt. They're not investing for the future. They don't understand basic financial concepts, and they're making it all worse by trying to keep up with everyone else's fake version of success. But here's the thing that you need to understand. These statistics aren't your destiny. They're just showing you what happens when people follow the crowd and do what everyone else is doing. The beautiful thing about knowing these numbers is that it becomes crystal clear how to do better. You don't need to be a genius. You don't need to win the lottery. You don't need to start the next big tech company. You just need to do the opposite of what's normal. Build an emergency fund so you're not part of that 40% who can't handle a $400 emergency. Live below your means instead of at or above your means so you're not living paycheck to paycheck. Avoid consumer debt like it's poison because that's exactly what it is. Invest consistently in low-cost index funds instead of keeping all your money in a checking account. Learn the basic principles of personal finance so you're not making decisions in the dark. Stop comparing yourself to other people and make financial decisions based on your actual goals and values. None of this is complicated. It's actually pretty simple. But simple doesn't mean easy, and that's why most people don't do it. It requires discipline. It requires saying no to things you want right now so you can have financial security later. It requires being different from everyone around you. But here's what I know for sure. Being broke is hard. Being in debt is hard. Living paycheck to paycheck is hard. Not being able to afford emergencies is hard. Choose your hard. You can have the hard of discipline and delayed gratification now, or you can have the hard of being broke and stressed about money for the rest of your life. The statistics show us where normal leads, and honestly, normal leads to broke. So if you want different results, you have to be willing to do different things. The choice is yours, and the time to start is right now.